right, everybody, let's go ahead and get the ball rolling today. We are going to be going over, this is meant to be the last in our beginning balances session, but hopefully you guys kind of get the gist of the beginning balances, and I kind of wanted to talk and switch it up a little bit. So we're going to talk about theory around beginning balances of non-posting transactions, and then we're going to talk about trial balance entry and kind of how we get that stuff into the system. So just a reminder of what Fourlane does here. We want to make sure that everybody has access to data to make decisions, right? So it's all about how you're setting your data up in the system. Everything when it comes to accounting, if we're using accounting as a glorified checkbook, if we're using our QuickBooks file as a glorified checkbook, then that is not using it effectively. We want to make sure that all of the data workflows, we say, where does the data come from? Where is it going to? And what report are we using with that data? Because if we're not using it on a report somewhere, then why are we even putting it in the system? That's the whole point of our accounting system. So again, last week, couple weeks, we've been talking about accounts receivable, accounts payable, inventory, uncleared checks, and we're going to do a little bit around non-posting transactions today, and then focus mainly around what trial balance is and things to consider when you're moving across trial balance from one file to the other. So that's going to be really my focus a little bit today. Okay, so starting off with the non-posting transactions, right? So what is a non-posting transaction? That is something that inside of QuickBooks Online. That is something that has no financial, it's a transaction you put in the system, but it does not affect your financials, right? So an estimate, you put that in the system. It is a holding place for what you quoted your customer. It has no effect on your financial data at all. I'm going to go in and create an estimate. And when you go in to create an estimate, so when you think about what an estimate is, right, it is our way of tracking what we need to invoice a client. This is what we're keeping track of with our estimates. If you have in a previous system, right, you have an estimate set up already. So let's say for Amy's Bird Sanctuary, and the original estimate was for design, and it was for 100 hours at $75 an hour for a total of $7,500. Now, when we have this estimate in our old system, we will just save it, right? If the 100% of the estimate is outstanding, then we're just going to save it, right? And keep it outstanding like that. But let's pretend that the original estimate was for 150 hours, and now we need to continue to bill. We've already billed for 50 hours. We need to bill for the additional 100 hours that's left over. So same thing, when we move over our open estimates into QuickBooks Online, we want to move over the open part of it. You don't want to put in the 150 and show that you have 150 hours still left to bill. You only want to put in the 100, okay? That's one thing to think of. When you're moving over from another system into a new file, you want to bring over the open portion of it, not the entire thing. Now, the other thing to consider when we look at this, so this is estimate 1001, and I'm going to go ahead and create my invoice from here. So let's say I wanted to create my invoice for 50 of the 100 that is left over, because I told them we're going to bill you 3 different invoices at 3 different periods of time for 50 each, okay? So when I save this transaction, that invoice is saved. If I go back to my linked estimate over here, it shows that the estimate is still outstanding for the 100. It still shows 100 on here. It didn't change this estimate to say 50. But what it does do is it closes it, right? And it says there's one linked invoice, and I don't have a button here anymore to invoice for this estimate. So when we're putting in open estimates into QuickBooks Online, one of the things that we want to consider doing, if we know that we have a schedule for when we are going to be creating invoices, and you don't want to put it in the estimate for 100% of it, you want to put in 2 different estimates, one for 50 on 7/6, right? And then another for the additional 50 quantity on 7/20. Right? So if you have a schedule of estimates, you want to make sure that you are putting in each scheduled item as opposed to the estimate as a whole. Okay, because it does not leave this estimate open when we create the invoice for this estimate. Hopefully that makes sense. So that's one thing to keep in mind. So the other thing to keep in mind when it comes to estimates is when we are looking at projects, right? When we are deciding for, how much, projects, when we're looking at how much we have with open estimates versus actual, that might be the only reason we have the estimate in the system, because we're trying to pick up how much is our estimated revenue and how much is our actual revenues, how much is our estimated costs, how much is our actual costs. And when you do that, I don't have any projects set up in the sample file, I guess. But when you do that, you can put in 100% of the estimate. So if you're not doing the estimates to tell you what to bill, but you're doing it for reporting of estimated versus actual, then you can put in 100% of your estimate in here, okay? Now you have to get your actual costs in the system as well, and that's like a whole other video. I think we actually have a session coming up on how to put actual costs in when you're doing beginning balances, because you do have to put you have to put some transactions in the system to pick up actual costs to date when you're doing a cutover. All right, so when we flip on over to the purchase orders now, when we put in a purchase order in the system, so I'm going to do it to Bob's Burger Joint, and I'm going to do the same thing here where we're buying, we don't have I'll just say a pump, and I'm going to buy 100 pumps. Okay. So when I save this purchase order 105 saved, and then when I move it over to a bill, right, I have that link purchase order right there, and I have the quantity of 100. If I put in quantity of 50, and I say save, the bill's there. When I go back to the purchase order, right, the purchase order still remains open. So it's a little bit different how it's treated in here. Now, when I copy it to a bill, right, it picks up the remaining 50. So on the purchasing side, when we say you can go in and you might receive them at multiple different times, it's okay. But on that purchase order, you want to make sure that you're only putting in the open quantity, right? The open quantity, not the entire purchase order. So if this original purchase order was for 700 pieces and I have 100 left to receive, then I only want to put in the 100 for my open on purchase order. But it's a little bit different here. Okay. Now I know last week we talked a little bit about trial balance entry. Right? We talked a little bit about putting in trial balance entry for opening balances. But I did want to look at what a trial balance is, because I use this term and I got some feedback after the meeting last week about what does trial balance mean? So you think about it, what is a trial balance? Oh, it is a report. So let's take a look at this report real quick. So when you look at a trial balance report, it's telling you an as of date. Okay, so as of July 6th, and I can edit it if I needed to do last month or whatever. As of July 6th, it's telling me the balance in the accounts. So checking balance, that makes sense. As of July 6th, balance sheet. We're used to balance as of. Okay, savings, $800 as of July 6th. That was my balance in the account. Not necessarily my checking balance or my savings balance in the bank, but this is what my QuickBooks is showing, is the balance in that account as of that date. Accounts receivable, right? Inventory, all the way down. So all of the ones that are balance sheet type of balances, trial balance makes sense. Now you can see the natural debits are sitting in here. The natural credits are sitting over in the credit column. Here's my accounts payable, my MasterCard, etc. So a trial balance is balances as of. For balance sheet, this is a rolling total for all time, forever and ever, right? Adds up to this 1201. All the deposits, all the checks adds up to this 1201. And that's the same for all balance sheet accounts coming down below here. Now, once we get into the profit and loss accounts, that's where it changes. So where this 1201 is the total for all time, a rolling balance for this account, this design income, which is a profit and loss account, if I drill down and see the details here, it is not going to be for all time. It is going to be for this year. Okay. Now, if you're on a calendar year or you have a different fiscal year end, that will matter. But what this picks up is it picks up all of the transactions and what is the total of all of the transactions for a period of time. And why is that? Right? When we go back to our summary report here, why is it that it picks it up for all time up here, but down below it picks up for a period of time? Because what QuickBooks does is at the end of the year, and all accounting softwares do, some don't do it automatically, right? Some you have to actually, some of the older systems, you have to actually go in and make this adjustment. But what it does is at the end of the year, QuickBooks automatically takes all of the revenues, all of the cost of goods sold, all of the expenses, and they zero out all those accounts for the year, and they roll it into retained earnings, right? So because this account does not get rolled into something, right? It is just a rolling balance for all time. But because the design income account as of 12/31 zeroed out, and then we started fresh January 1st, it only picks up this amount, okay? So when I say we're doing trial balance entry, right, what is our opening trial balance? Using this trial balance account or report is really effective if we are only putting in a single trial balance entry, right? So if we're just putting in as of July 1st isn't a great date. Let me do last quarter. There we go. I don't, like June 6th will be super confusing. So if we're saying we are doing a cutover, we are starting a new file, we are merging in our existing file with a separate file that we had kept, a separate small LLC we had kept, whatever the reasons are that we're merging and setting up a new trial balance. This report is very effective if it is a one-time putting in information, right? Just we're putting in open trial balance only, no prior periods, no prior months. This is a very effective report to use. However, with most, like we do a lot of conversions for people. So with most of our conversions, people want to have comparative financials. They want to be able to say, I want to know my balance sheet as of June 30th. I want to know my balance sheet as of May 31st. I want to know my balance sheet as of April 30th. I want to know my balance sheet as of December 2022. So we can't always use trial balance. Trial balance makes it very easy because of the debits and credits, and it totals everything up, and it tells us exactly what we want to put in if we're doing year-to-date stuff and one. But if we wanted to do month-over-month comparisons, then it's not as effective to use trial balance, okay? So then what we do instead is we go in and we run the separate reports. So we use profit and loss as an example. Okay. And we'll take the profit and loss from January to July, push it back to June 30th. And instead of displaying columns by total only, which, look, there's that $6,000 number, right? Design income, that picks up the entire period. What we'll do is we'll total it by month. Okay. So then when we put in our journal entry for open balance, I put in the January one, which is 0. That's not very good. I put in the February one, and I date it February 28th. $190 to landscaping, $131 to plants and soil, right? I put in the March, April, May, June. So profit and loss is pretty straightforward. And what my offset is, right, when I'm putting this in, so I put in all of these transactions, the difference at the bottom, this $644.71 needs to go somewhere in my journal entry. So that would go to opening balance equity. Okay. If there's a difference, it go to opening balance equity. So profit and loss is pretty straightforward. I just use the profit and loss report, I total it by month for whatever period we're doing, and then I can use this to put in my open balances. Now, a lot of times our clients, when they are doing it themselves for their beginning balance entry, they will key in a journal entry for each one of these months. So they will just manually type it in. So I'm going to take this report, and I am going to, it's so hard because I have it zoomed in on my screen over here, but I'm going to go ahead and print it to a PDF real quick. Okay. That way I can push it over to my other screen and then come in, and I'm just going to show you when we put in the journal entry. I'm going to do February because it's very basic, right? So let's take this back to February. And it says, okay, for landscaping services, we have a credit because it's a revenue of 190. We have plants and soil. We have it in there twice, so I don't know why, but okay, plants and soil, it'll be 131.25. Then we have pest control services. Pest control services. Sometimes I move too fast for. And then we have the $70. Now you can see I can use this total at the bottom, $391.25, to make sure that I'm doing okay. So if I look at February, we're at total income of $391.25. So far I'm doing great. Now down below here we have a lawyer fee. And again, this is a, 300. This is a credit because it's an expense. And then we have a difference of $91.25, right? So I can see that just visually because we have $391.25, but that's where I would push the difference into opening balance equity. Okay, so it would look something like this. Here, I can save it. All right, now let's talk about the other side. So we got all of the P&L in here. Everything is looking just fine. Everything is looking just fine. Now let's talk about balance sheet, because balance sheet is a little bit different. So when we come into our reports and we pull up our balance sheet is an as of balance. And you have to decide the best way for you to do the as of balance. So if I'm doing this year to date through June 30th, and I want to total by month, you can see in here, January is $5,000. February is also $5,000. So if I go in and I put in a debit to checking in January for $5,000, and then I go put in a debit to February for $5,000, I'm going to end up with $10,000 at the end of February, and that's not what happened, right? We need to leave it just at $5,000. So there's two different ways to put in balance sheet. One way is we put in the $5,000 for January for the cash, and that's the only thing in January for cash. We put in the $5,000, and then we reverse it as of February 1st. And then we put in the ending balance at the end of February, $5,000 again, and then we reverse it March 1st. And then we put in the March 1st balance, or March 31st balance, $46.25. Then we reverse it down to 0. And then we put in the, right? So you can see. So you have the option to put in the number by month and then reverse it to 0 it out at the start of the next month. Or you can put in the variances. Okay, so I could put in $5,000 in January. In February, because it didn't change at all, I put in 0 for this account, for checking account. In March, because it lowered by $375, I would put in a credit to cash to my checking account for $375 to bring that balance down. Hopefully that makes sense. So two different ways. One is put in balance at the end of the month, 0 it out at the start of the next month, put in balance at the end of the month, 0 it out, balance 0 out. The second way is you have to pick up the variance month over month, okay, which can be a little bit more work. And that's balance sheet month over month, how to get the transactions in. Okay, any questions? Make sure I have any questions in there. I'm here for questions if you guys have anything. I am done with talking about beginning balances. I'm over the beginning balances. Next week, we are going to talk about reports. Yay! We're going to talk about some reports. I got some requests for people to talk about reporting. And so we're going to look at some of the reports that are standard inside of QuickBooks Online and then how you can customize some of them. I'm not going to go into the advanced reporting quite yet, right? The advanced reporting that's available in QuickBooks Online Advanced, which is like pivot tables and all that fun stuff. We are going to talk about prepaid expenses coming up here soon. That's like when I prepay for Salesforce for 3 months. How do I amortize that payment? We're going to talk about estimates coming up, using estimates versus actual. Then we have some job profitability things coming up. But hopefully you guys are able to take away something. It's always good to be able to take away 1 or 2 things from each of these trainings. And that's all I've got for you this week. Let me know if there's anything we can do to help. Thanks, everybody.